Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, everybody, welcome back. Good morning, good afternoon. Hope you're doing well. And we're back for another one. We've got some interesting moves happening this morning in terms of gold. Continues to look very strong, up about at 1.5% here this morning. On the daily chart, just kind of stabilizing at where it currently sits, just shy of its all-time trading highs. We had a really good push in the last week on gold prices. This continues to be one of my favorite trade setups at this time. So if we do see pullbacks, I will stay in the trade. I'm fine to sit through a pullback, but I do plan on stopping out of gold if needed if we break this support around the 3120 to 3140 zone of support. So I like this quite a bit. Still bullish on it. I did get something interesting pop up on the EdgeFinder today. We got a NASDAQ very bullish reading for the first time in a very long time, which, as you guys know I love trading the NASDAQ. Still some price action stuff that I think we need to chop through together to discuss a little bit. But we've got NASDAQ on the list. Hold on, I'm going to sneeze. Excuse me. So we got NASDAQ on the list. We got gold still very bullish, strong reading there. And so I always kind of have to remind myself and others how we use a top setup indication from the EdgeFinder. Like, what does this mean? What does very bullish mean? Because oftentimes people do make the mistake of thinking very bullish means I'm getting long right now. I'm taking a position. That's oftentimes what, people think that I'm thinking when I see this. And while it does significantly increase the probability that I'm going to take a position, just because we get a bullish reading on the EdgeFinder does not mean, oh, I'm in the trade right now. Okay. So the EdgeFinder is a screener. It screens a whole bunch of data, but it is not necessarily a market timer. Like the EdgeFinder does not tell you like, oh, right here, long with a stop loss here. Gold's been a bullish reading for like a couple weeks now on the EdgeFinder. So it's been getting a bullish reading. So that doesn't tell you when to buy gold. It's not really designed to be that. It's designed to be a screener that uses a mix of economic, technical, and sentiment data to give us a general read on charts. So let's dissect this gold reading here, right? So I went long gold after it popped up on the EdgeFinder's top setups page, and it pulled back to a level that I really liked. I took an initial attempt to get long on gold right around the 38.2% retracement. So it had this big push up, it pulled back, and I went long at the 38.2% retracement. That trade stopped out, so I took a loss on that idea. And then when we spiked lower down into the 61.8% retracement, that was my second attempt to get long gold, which worked out much better. So we've got now the gold pullback that I was looking for, plus the EdgeFinder reading getting a bullish, right? So if we're getting bullish from the EdgeFinder, and then I have a technical setup that I like quite a bit, there's a high probability that I'm going to take that trade, and I'm going to risk small in case I'm wrong. And if I'm right, I'm going to try and let that trade run. That's really what we're looking at, right? That's what we're trying to do, is we're trying to keep it simplified. We're like looking for high probability trading setups. We're putting everything else to the side. And pretty much for me, that means not taking any trades unless I have my system, right? That EdgeFinder reading plus a technical setup that makes good sense and that allows me to carefully construct a good risk to reward trade. At the end of the day, I say this often, trading is not certainties or, being an amazing predictor of what's going to happen. It's just educated guesses and risk to reward. That's all good trading really is. Educated guesswork with a back-tested system that tells you if you keep doing this, you're more likely to be right than wrong, and small size per trade so that if you're wrong, it doesn't hurt you that bad. And if you're wrong multiple times in a row, it doesn't crush you, right? That's the difference between people who do this for 10 years, 15 years, 20 years plus, from the people who do it for one summer, blow like $3,000, and then they quit trading and call it a scam. There's two different types of people, right? There's the people who want to try and do this thing quick and make a lot of money quickly, or there's the people who embrace the journey and love learning this stuff day in, day out. Even if it's not easy, right? It's hard. It's hard stuff. Good to see you, Belent, and everybody else on the show here. Good to have you here this morning. Nick, if it was designed to be like that, it was worth millions of dollars. Yeah. Now, I mean, if there was anything that gave you a holy grail, and people sometimes ask, they say, Nick, if your system is so good, then why are you selling something like this? And I don't know how to say it in a different way, so I just keep repeating myself. This is not a black box magic algorithm that tells you when to buy and sell. That's not what the EdgeFinder is. It's a screener. It screens data. It helps to filter out trends from the economic data side, from the technical side, the sentiment data. You still got to put in work, right? This thing is not your one-stop shop to making $1 trillion in the next month. Like, that's not what the EdgeFinder is. And I, it hurts my soul when people assume that's what it is, because I've worked so many countless hours, myself and the team. We've dedicated and poured, tons of effort, money, and time into building this. It's a screener. It's not a holy grail, system. I wish it was, right? Trading would be a lot easier if we all had a magical indicator, but the EdgeFinder is not magic. It's just a screener, and it's a powerful one, but it's not a holy grail. I'd sell my house for the holy grail. Well, that would just make good financial sense, because you could buy back like 50 houses if you had the holy grail. There's a lot of people on social media that will promise you that they do have something like that. They'll sell you some magical secret strategy or some, whatever. So I would encourage you to avoid those types of people. There's no secret to making magic amounts of money in the markets, at least that I've come across. If anybody finds out something that can do that for them, please let me know. How much time did it take to create? Like, we've been working on the EdgeFinder for 3 years. There's 3 people, and we've invested multiple 6 figures into building into what it is today. It's a project. It's no joke of a team. We've got some talent behind the EdgeFinder, and it's a constant improvement. We're constantly surveying customers who use the tools. We're constantly looking to improve things and add new features that help people with their analysis. So yeah, no, it's a perpetual. We got a little dev team going on here. But yeah, multiple 6 figures, tons of time. That's the reality of it. Is Forex James on today? Bala, you ask that sometimes. You know where you can find that information, right? Head over to A1. And we usually have the live stream schedule posted up. So we have no James today. Let's see. Yeah, Bala, I've just seen you say that like so many times. I think I've repeated myself. I think you might be trolling me with that question. Anyways, NASDAQ. So here's the thing. So all of that to say, right? I just discussed this idea that I have on the NASDAQ. Like, okay, I am bullish on the NASDAQ. I've been, accumulating stocks, but I haven't taken any, like NAS 100 long kind of ideas with a stop loss on it. I haven't taken a trade like that. But the setup is starting to form. And what I'm waiting for, right? You get a really strong reading like this in the EdgeFinder, that's going to get my attention. Those have been some of my best possible trades in my history on the in the markets have been when we get a really strong reading on gold or a really strong reading on NAS, and then I can actually find a technical setup with a good risk to reward setup. I love that. And that's my bread and butter. So I'm watching for NASDAQ to break higher. I need this. This is what I personally am looking for. You may have a different style than I do, and that's totally fine. But this is for me. That Wednesday high, I need to see that wasn't just a fluke, right? What I mean by that is you had a huge surge up on the 90-day pause on the tariff stuff, right? So we had that huge surge, that really big excitement. But what I want to see is, okay, after that, we had pretty massive sell down afterwards, right? We saw the market at one point went down 7%, the NASDAQ 7% the next day. So we gave back a lot of those gains. We've been crawling back from that, right? Technically putting in maybe a higher low, but I can't really say that for sure until we get a clearing event of that spike day. So let's basically rephrase that. I am looking for this to happen. That Wednesday high, right? That big up day high. Can we break through that decisively? If so, any pullback, I am likely a buyer of that market, because then you've got a couple things working in your favor. From a technical perspective, you've got a break of this downward trend line. You also have this key notable recent high on strong volume, that huge up day. Again, what we don't want to see, what we absolutely, if you're a bull like myself, what we do not want to see is this trend line, these lower highs continue to dominate this market. And that's the risk that we have. That's why I'm not in the trade right now. The reason I'm not long the NASDAQ is because what I'm discussing is you have sellers still very strong here. Like, let's not be fooled. They are holding out really well right now. And you even had Bank of America, BAC, that's the stock ticker, which actually I think they reported their earnings this morning. Bank of America came out yesterday and they said to short the S&P 500. I don't know if I've ever seen that, or at least not in a long time. A major bank came out yesterday and suggested that investors short the S&P 500. That's a little nerve-wracking, right? You get a powerful bank like BAC, Bank of America. How did they do, by the way? Their earnings came out. They're not helping their own case here. They're up 5.5%. That's actually quite a bullish catalyst. JP Morgan trading higher here. I think we had Citigroup. Did we have Citigroup this morning? Yes, we did. They came in better than expected. So we had bank earnings. Usually in earnings season, banks kick it off, and banks are really telling. I haven't looked into this, and I will probably do so for today's analysis video. But we like to look at things like how much people are spending, how much people are saving, how people's savings are looking. All that data gets revealed in bank reports during the earnings. So it's really powerful indicators of the economy. So back to NAS, like I said, I just want to see us clear that Wednesday high, and then I am absolutely looking for longs. So if we cannot do that though, if we fail out here and we take out this low, bombs away in terms of a technical analysis perspective. Okay. Bank of America's request for shorts is literally like a civil coup. It's mind-boggling. Bulent, what if they are telling everyone to short the market to add liquidity so they can buy it? That's the problem with like news like that. Like, you can always just take the contrarian perspective. I added the A1 calendar to my Google Calendar as a layer. It gives alarms too. I recommend adding it to your calendar. That's a great point. Thank you for mentioning that. Yeah, so if you are a super fan of the show, you can head over to a1trading.com, live stream schedule, and you can actually add this Google calendar to your own calendar, like Bulent just mentioned. And what that will actually do is it will notify you when we go, or when we have a scheduled event, so that you never miss a thing. So if you're a super regular, I would encourage you to just explore that option if you'd like to. So yes, with the NAS, with the S&P, I'm very curious to see if we can get, one good update today. Like if you get NAS up like 2% in the coming day or two, that's going to set up, in my opinion, you've got the bull flag, you've got the breakout. We look great for further upside. And I think, that's never a guarantee, but that's something where I'm like, okay, I'll do this trade, right? I'll do something like this where I'm looking for the continuation play, and I think the risk to reward becomes very attractive. So that's a trade setup that I'm currently watching. I'm not interested in the short side. Again, my system is heavily leaning bullish. We have retail still very scared. Did you guys see the put to call for EdgeFinder users? Did you guys see retail positioning getting super contrarian bullish, right? The EdgeFinder is picking out a bullish reading because the crowd got scared again. We still got the put to call ratio in extreme fear territory. So we still have people really nervous about this market, buying puts, betting on volatility, betting that, the market is going to have some sort of rollover event. I can't tell you, I've had so many people commenting on my channel recently, like new lows are coming. Like it's not over. Bears are coming back. And like maybe they are, but it's just an interesting thing to me because not to say like those people could be right. I'm not foolish enough to say like, oh no, they're idiots and like we're definitely going higher. We could go lower. Like understand, I'm not saying with certainty anything, but when I see those comments rolling in constantly, that makes me more bullish because everybody seems convinced we're going to go back down and take out those lows. And so that actually is another bullish indicator, is like I'm getting it in the comment section indicator. That sounds like really predatory to my own audience. And I promise that's not what I mean. Like most of you guys, but a lot of times I've had a lot of recently, my videos have been getting into a broader reach in terms of like new viewers. Like a lot of new viewers have been watching the channel. And I think it's just a lot of hype around markets right now. So you're getting a lot of people who are running in and, they're super bearish and they're just dropping their comments everywhere. So I think you're getting a little bit of that. So I'm not seeing any super regular viewers, just like outright bearish. And the ones that are bearish and like actually logically so, they add something to the context to what they're saying. Like the thing is, right, you get these people who are like, the whole thing's a sham, short the whole thing, markets are going to zero. Like that means nothing to me. If you say to me that you think that the market is still expensive and that trade war, if prolonged, likely could lead to serious deterioration of company earnings, and that the multiple on the market is too euphoric still, and that there's more room to correct that multiple. If you give me like an explanation to why you're bearish, and then you also say, I'm waiting for sentiment to relax before I can pick up a short position, meaning like, okay, you're bearish. If you're bearish, this would be the area, right? This is not the area. We've been discussing this a lot on the channel. A lot of those comments came in right around here. Like you cannot make this stuff up. People get so obnoxiously bearish as the market is reaching its low. I've seen it so many times. Now I'm not criticizing everyone who's bearish. If you're bearish and you're saying, well, I've waited, now I'm finally seeing the reload. Like I know Chris Pulver is talking about this idea, picking up some potential hedges now that we've had this corrective move and that there is more bullishness that's shown up. That's when he's looking to potentially take advantage of some downside. So there's a difference. There's a difference between the, fearful market's going to crash crowd and the people who are constructively cautious and bearish and looking to hedge their portfolios or looking to take a stab at the short side with a tight stop. I can respect that significantly more. There's just two different types of bears out there. Same thing for the bulls, right? There's two different types of bulls out there. There's annoying bulls who are like, they're blindfolded by their own bullishness and there's never anything wrong. Those people are annoying too. So don't get me wrong. Constructive bulls or constructive bears can make money. The old expression is bulls make money, bears make money, pigs get slaughtered, right? That's the idea in markets, is people who are just, they don't know what they're doing. They're just chasing emotions. They will end up blowing everything they've got in the markets. And unfortunately, that's a lot of people in the financial markets. I was talking to one of our producers yesterday. Unfortunately, the reality is that most people are not meant for this stuff. And that's like a harsh reality, but most people cannot handle the emotional swings. Like they're not easy. Like I'm not saying that like, oh yeah, no, I'm just this, alpha sigma, never feel a single thing of emotion. Like the markets are hard, man. But most people they just don't have the the willingness to spend the time to learn this stuff, to back test this stuff, and probably shouldn't be touching the markets. So anyways, gold here. Let's see if it pulls back. If it does, I've been saying this quite a bit on the channel. Like, I've got my stop loss here. I'm also looking for any chance that we get some sort of higher low. So if we get this type of move through the rest of this week, I'd be interested in potentially trailing the stop loss further. Can we look at the put to call ratio for gold here? Gold's so interesting on the put to call. Like, we briefly saw people rush to buy calls on gold. Like, when this gets really low, people are rushing to buy calls on GLD, which is the ETF that we use to track the put to call here within the software. But now people just quickly relapsed back to buying puts on gold. That's a bullish indicator for me because, again, people betting that gold is overbought. It's going to go lower. That seems to be the sentiment here. And yeah, I think I like that quite a bit in terms of like a continuation signal. Gold could have more upside. Let's take a look at silver. Okay, this is totally skewed. We need to look at this. I'm going to write this down for dev team. Silver put call thresholds. So when I say this is screwed up, the data is coming in correctly, but this extreme fear threshold needs to be brought way down because we are not reaching 2 on the put to call ratio for SLV at all. We're not even coming close. So that neutral sentiment and the extreme fear need to be brought down. The barometer for this needs to be rechecked. So we'll take a look at that on our back end later today. Let's see, where are we at? Euro dollar. Also, I have a CAD Swiss trade. This has been a troublesome trade for me. And when I say troublesome, in terms of margin, this could go on for a long time. I'd be perfectly fine. I have a very small 2 positions on the CAD against the Swiss franc on the long side. I am looking to scale into this trade further. This is a bit of a contrarian play, dollar cost averaging concept that I've got going on with the CAD Swiss. When you're betting on the Canadian dollar against the Swiss franc, you're betting that trade negotiations globally will improve. That's the way I would see it. If you're betting short, you think they're going to worsen, which has been, there's been uncertainty around trade for a while. So I'm on the wrong side of this right now, but I do think this will swing back the other direction. There could be some nice gains on the CAD Swiss in the long run. But again, I have really small positions on this and willingness to add to that if that continues to sink lower. The Australian dollar, look at this, guys. Kiwi dollar. Oh my goodness. Someone in the chat, I apologize. Who was it earlier? Cheryl's mentioned that, what do we have? She mentioned the Kiwi dollar, right? Why has the Kiwi dollar got some strength today? Is it China? Did Chinese stocks pop? Nope. Not really Chinese stocks. Dollar index didn't really sink lower. Does anybody know what's going on with the, did we get some, because it's not just the Kiwi dollar either, right? It's the Australian dollar also. And is it pound? Okay, yep. But it's not really a dollar bearish move. This is definitely something to do with just interesting. Does anybody have some insight on what's going on with the Kiwi dollar? I've been out of touch on it, but anyways, another one is Euro Pound that I'm kind of watching this one again. Euro Pound spiked way up, almost got up into this area, 87.50. I believe Top Setups Eco page. Let's flip this around. Yeah, Euro Pound, like -3 score on the Eco only comparison. If we get any higher, I'm probably going to take a short on the Euro Pound. Dollar yen, You have to be careful with this currency pair. It moves like a monster, especially if you're trying to dollar cost average. But if we did get a swing back up here, I may take a small stab on the short side for dollar yen. I'm pretty selective with yen shorts simply because the carry trade is pretty expensive. Like when you're short something like dollar yen, it's very expensive to hold overnight. And as a swing trader, that can really stack up. So I'm really selective with yen shorts. Kiwi dollar still looks incredibly good. Obviously, I wish I had stayed in that idea. I took profits on it, but it's one of those things. This is the challenge of taking profits too soon. Now, again, I use a slightly different strategy for dollar cost averaging in Forex than I do when I'm trading like gold or silver or NASDAQ, et cetera. Huge move higher here. I bought around this area, went into the red, shot back up, took profits here. It's obviously kept going. But if we do get something like a pullback on the Kiwi dollar, I may look to take this trade again. We've had some pretty upbeat economic data. We can actually look, by the way, with our economic heat maps. We do have New Zealand on the list, and you can see why New Zealand dollar is so strong is you just have a laundry list of higher than expected or better than expected economic prints coming out for New Zealand. Like we had better than expected GDP growth. We had better than expected retail sales. We had inflation data that came in slightly higher than expected, which is strong for the currency. So just something to think about. So we'll see. Anyways, guys, up next, we've got our next show host taking over. I just want to quickly remind you, if you do not have the EdgeFinder, it is the best time of the year to pick up a copy. It is currently 45% off for the remainder of this month. For those live stream viewers that are with me here live right now, if you send us a direct message on our website, a1trading.com, or using the link in the description down below, that's how you get the extra 5% off. We're doing 40% off, but for live stream viewers, we'll do 45 if you send us a direct message on the website right now. You can also explore the EdgeFinder using this link that's been dropped, a1trading.com/EdgeFinder, if you'd like to explore its features and see if it's right for you. Up next, guys, we got Alan Perez taking over the stream for a little bit, going through some trade setups and ideas that he's got on his watch list. Stay tuned. We'll be right back. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good morning, everyone, and good afternoon. Man, I'm so glad to be back. Last week was kind of had like a little void in me. You ever like get sick and you want to go to school but you can't go? So I got a new computer and better internet connection. So we should get a stable connection now. You look and sound great. Love the new PC. Thanks, man. I think it was due. It was time for it. My girlfriend kept giving me crap for it, and so you guys just helped me expedite that transition. But as far as currency goes, so last week was a good week for myself. I was playing long euro dollar, short dollar yen, short dollar Swiss, and my take profit levels got hit because we kind of hit those levels on the higher time frames that you kind of have to be mindful of, right? If like for the euro dollar, when we hit that 112 level, my thought process was, well, there's probably a lot of sell orders sitting right there. And so that day, though, we did close pretty strongly, way above it. And so now I'm looking for potential opportunities as to where FX can go. There's a lot of momentum, though. But the thing that I'm kind of just looking an eye on is, and I know I might sound like a broken record here, but tariffs. Now, the cool thing in my thought process when it comes to tariffs is this is not like one of those black swan events like COVID where you're going to have some slowdown and it's going to take a long time to recover. This is one of those things where all it takes is just one deal to be made or a couple of deals to be made, and all this uncertainty and risk on comes right back into play. And so I'm being very cautious when I think like that. I'm not Filipino. I'm Mexican American. But I do get that a lot. My dad he gets that all the time. But when it comes to, for example, the euro dollar, right, where I'm going to go down into a lower time frame here, we have this resistance level that could turn into support. So I drew like this little wedge here. Take it with a grain of salt, but I just drew it. If we get a flush down, I want to see how we react to the 112 level. Now, let's say we get to the 112 level and there's more optimism for the US. People are investing into the stock market again. Foreign investors are also investing into the stock market. When they do that, they have to, there's going to be an inflow of US dollars. So that's what I want to see here. I guess my biggest concern would be, is this break, and I'll clear this out for you guys, but is this break above the 112 going to be a fake out, or is the momentum so strong that we're going to see some continuation? So I think the safest bet for euro dollar is going to be we kind of hit this 112 level and then we see how we react from there. Euro USD Euler, if you look at technical, there's a bullish flag pattern. Yeah, it could be that's the thing, right? So if I'm just remembering how I kind of proceeded with the euro dollar, this momentum here was very strong. This one was off the back of Europe committing 500 billion euros to their defense spending, right? And so the market really saw that as a positive thing. Then we got this really brief pullback, and I was honestly hoping for a deeper retracement, maybe a 50% retracement or 61% retracement. But the thing with these markets that have so much momentum, pullbacks can get pretty like shallow, and they can get bought into really fast. And so when I saw like this level here, I went ahead and took a stab at it, and it ended up working out because at the time we were hitting the 200-day moving average. And so that was enough for me to go ahead and jump in. Same thing right here, very shallow pullback, and it just got bought into right away. So that's kind of what I'm expecting with this one. If we get to the 112 level and we see some immediate buyer step in, then yeah, I would potentially go ahead and just hit a buy right there. Now, one thing that I saw someone said, let's see who said it. King Ahmed, he said US dollar CAD, right? That to me would be a good hedge just in case, because if we look at the dollar CAD, we're at this level that was previously resistance, and now it turned into support. And within the range, right, we're at the bottom of this range. So this could be a good discounted level if, let's say, we get some more optimism in the US, more inflows in the US dollar. We could get this thing for cheap. Risk to reward wise, we have all this above us to kind of go ahead and target. You have your first target here, which is 240 pips. Then you got 400 pips above that, and ultimately 600 pips above that one. So this could be a good risk reward trade if you're early on to it. It'll be really, really nice. And this could be a hedge, right? If we do see that the euro dollar actually does fail to kind of go and proceed with that momentum, this one could really play out in favor of that. So this is one thing I might look at. Now, I don't want to be too early, and I don't know if you guys are familiar, but there's a trader called Lance Breitstein. He's a prop trader in Chicago, and he preaches being on the right side of the V, which is basically, when we get a bottoming pattern, you don't want to just jump in at the bottom and try to pick a bottom. You want to get in on the right side of the V. So basically what I'm looking for the dollar CAD, if I want to partake in this hedge, is I want to see some new higher highs and higher lows being formed. And then I'll consider going ahead and jumping in dollar CAD. Dollar Swiss as well, if that does take on and this whole like risk on sentiment becomes the new thing. Because dollar Swiss really depleted a lot because it was very risk off. So we got assets like the Swiss franc and the yen that are safe havens. The Swiss franc, especially because 25% of their currency is backed by gold. So when times like this happen, Swiss franc really appreciates. And if we look at a weekly time frame here, we see that we're very much undervalued. So this could even be a dollar cost averaging position where long term you want to target something like this, the 9200 level, or even up to like the parity level if you want to do that. Um, but on the flip side, to be honest, we do have all this downside that we have to be mindful of. So if you do take on this position, I think the smartest way to go about it would be to pick it up really, really small. And then if you do see some buyers stepping in and we see some bullish candles here, then at that point I would be like, okay, it's pretty much safe that we can start adding to the position. But if you add right here and then we start breaking these levels, then you could cut your loss pretty short and you have a small size, so it's not really going to be detrimental to you. Or you could just keep adding at these levels right here, the 700 level or the 7500 level. Andre, pound dollar. Yeah, pound dollar is pretty strong, huh? So for those that were patient, I know I didn't take this trade, but I know like 3 weeks ago, 4 weeks ago, we were all talking about the pound dollar and how we wanted to get to the 2800 level. So I decided to go with the euro, but for those that went with the pound dollar, if you were patient and waited at the 2800 level, I think you're in a good spot. We could target, if we do see some just continued momentum, there's no pullbacks, I would say this level would be a good take profit entry, or this one right here. That would be something I'll look for. Now on the short side, let's say we react off of this zone, like we see this very small wick on the daily, but take that with a grain of salt. We still have 7 hours for the day. If we do get a rejection, then I could see us retracing a little bit, and I guess some pullback opportunities to buy into could be maybe the 38 or I think the 50% would probably be the best. But I don't know about shorting pound dollar. It has a lot of strong momentum. Fundamentals, EdgeFinder is in favor of the pound dollar. And so you'll be going against the grain on that one. And so you could pretty much get stopped out. All it takes is some big flow, and you'll definitely get stopped out if you're going against the grain on pound dollar. Can you see anything of note in dollar CAD? Well, for now, dollar CAD, like dollar is really weak, right? So this one would be a hedge. Now, a hedge can also turn into an in-play trade. So if we see some more risk on sentiment, more inflows into the US dollar, then the dollar CAD that was initially a hedge could also turn into a trade that makes a lot of sense. And so just kind of taking into account that we are in this discounted level on a higher time frame basis, this was support, now turned this was resistance, now turned into support. We could go ahead and be a little bit early, and if you hold on to it, it could be a good one. But since it's a hedge, it's not intended to be a very profitable trade. It's intended to protect your risk if you're going short euro dollar, things like that. Dollar yen made me mad, guys. So on my weekly outlook, I called out this trade. This was one of my trades that I was super confident in, and we bounced off of this resistance level, and then we saw this upward trend line get broken on the lower time frame. This was my thought process. I'll go through it with you guys. Upward trend line here. We bounced off of this higher time frame resistance. I loved it. We broke it and we saw some continued momentum. So I went ahead and shorted, and I was in profit, then in break even. A little bit of drawdown August 2nd when Trump went ahead and did his tariff announcement. It was a 10% baseline tariff initially, and so that was better than the market expected. So it was more of a risk on at that point. And then about 30 minutes later or so, he pulls out the board, as we all know, and he went ahead and basically said he's going to do 50% reciprocal tariffs on what countries are giving us. And so that was very risk off. So the trade actually went in my favor a lot. Now I made a mistake and I didn't move my take profit lower. I kind of had it static. I had left. I didn't realize that we were going to be moving this fast. So I got out prematurely at 172 pips, which I'm very grateful for. But I could have definitely took advantage of all of this. Like I really got stopped out really, really early. it was something like this, guys. So kind of shot myself in the foot there. But as far as re-entry opportunities, we see this level that was holding support, and now we can see that it's turning into resistance a bit. So if we get a push up into here, the 144, maybe even the 145 would be a better entry. Then I could go ahead and consider shorting dollar yen again. I think that'd be a really good trade if tariffs are still uncertain, if there's still a lot of threats going on, and there's a lot of risk off sentiment, and there's a demand and appetite for safe havens. I could definitely see dollar yen continuing to the downside. Ads Ali, is it worth buying? I don't know. If you're hey, thank you, Bashi. If you're a long-term investor, I would say yes. But then just thinking of where we've been at and what's been happening with the yen particularly. So remember August 5th, guys, yen got really undervalued. Bank of Japan went ahead and intervened. And then after that, they went ahead and hiked interest rates. So that unwinded a lot of carry trades. And at the time, our interest rate for the dollar was like a 4.75 or something like that. And the yen's was like 0, right? So there was a very good spread for carry trades. Now you got to think that the dollar's also decreasing their interest rate and the yen's also increasing their interest rate. So that spread becomes a little bit tighter. So the logical sense for, the dollar yen continuing to be one of those no-brainer carry trades for bigger institutions and bigger players, I think that's starting to fade a little bit. So going long term, I'm a little bit cautious. I would prefer to the downside, but that's not to say that we can't go ahead and continue in this range right here that we're in. That's very possible in the meantime, because these trends, when they shift in Forex, they take a long time. It's not like an instantaneous thing. So perhaps, something goes on in the world where we can see some dollar yen appreciation, and then longer term, we can see some better sell signals. Lee, he basically did buy my PC. He walked me through and walked me through the specs, and he advised me pretty good, and I'm pretty happy about it. So thank you, Bashi. Gold analysis. I don't trade gold, guys, but I might. So I might start trading gold. But from my knowledge and from what I know about gold, it's one of those assets that, similar to the stock market. Now, I know right now the stock market's not really showing those characteristics, but gold is one of those things that traditionally and over time continues to go up, right? So we had this big run in gold. Some could say this could be a top, but gold is, you got to be very cautious, because all it takes is one thing to hit the news terminal and gold really thrives. I would say pullback opportunities, and I may be naive for this, but I would like to see something like come back down here, or perhaps something more aggressive in my eyes would be something like this. And this right here is the 3050 level. For gold, that's what I would look for. To me, that'd be a good risk reward. It might take some time to get there. You never know, but I would swing trade gold. I think gold is super volatile. To be intraday scalping gold, in my opinion, it's so difficult. And if you're able to do that, man, kudos to you, because that's really hard. Similar to like scalping the yen. I know it's possible out there, but the ATR on the yen pair could be, triple digits some days. That's really difficult. So that's basically what I'm looking at. I guess on my radar, just to kind of sum it up, euro dollar, I want to see us kind of hit this 112 level. And once we get there, once we approach it, I want to see what we're doing, right? What's the sentiment? Are we risk on, risk off? Is there dollar inflows to the point where this could have been a fake out? Or is there still uncertainty? Is the euro some sort of a safe haven that's going to outperform the US in the meantime? And we could get bought into this level and continue upwards. Dollar yen, I want to see us hit this level, preferably the 145. And if there's still a demand and appetite for risk off, then I'd consider going short dollar yen right here. Dollar Swiss, I think this could be a good hedge, right? We're undervalued extremely on a weekly time frame basis. This could be a dollar cost average position. And if it goes against you, you can cut your loss pretty short, or you can continue to add. And the one thing to be mindful of is that we have about 1,100 pips to the downside into the next bottom. Dollar CAD could be a good short-term hedge because we're at this resistance that turned into support. If we see some bottoming patterns, we can get on the right side of the V, then this could be a good trade that could turn into, or that could be a hedge initially, but that could turn into a really good in-play opportunity. I do like to see that the VIX is fading. So we're back in the high 20s. So if we see that, I know the equity indices are very opportunistic right now. And it may seem like, we're kind of late to the party, but I think it's more important to see that this level and this buying pressure is actually solid and something we can count on. So I would really like to see us hold these levels here. These levels that I have are pretty outdated. I'll probably just go ahead and redraw them. But for something like the NASDAQ, this is a level that I want to see. I want to see us break and hold this level, this 19,200 level. We can break and hold it, then I could consider going ahead and buying it. But tariff concerns are still amongst us, right? All it takes is one person to pull out of a deal where for some threats to go on, and then risk off comes back. So I do like that the put to call ratio is fading. We got the VIX fading as well. So those are good signs for me. I'm very optimistic about the future, regardless. Even if you do get some selling pressure back into the lows, it's a good buying opportunity. I wouldn't be scared for it. I believe Chris Pulver may be on. Chandler, is that correct? Is Chris Pulver in the back? Oh, I see what happened. No problem. It's all right, my man. But yeah, those are basically I guess what's on my watch list. But what do you guys think? I want to take some suggestions as well. If you guys have any pairs that you want me to look at or anything. You've been in DAX and NAS. Awesome. If you've been in the NAS and if you got early on, you're most likely killing it, James. Euro pound. I think it was Chandler that did that. Euro pound and pound cat. Yeah, Wolf and Kwang. I'll definitely go ahead and do those for you. Delete these old drawings here. Euro pound. If we do see, so Wolf, Euro pound. Let's say that the euro, what it did on the euro dollar was a fake out, and we hit that 112 level, and we kind of go past the 112 level. I think the euro pound can be a really good play, especially if we got some risk off appetite still at the moment. I think this could be a good one. Look at this, Wolf. We're in a big range here. So perhaps a good risk of reward would be if you can kind of wait for this level. Now, this is not financial advice, but if we could wait to get into this level here, that would increase our odds dramatically. And then you could, I would say, maybe a stop loss right above this fake out here, 300 pips stop loss, but your take profit's 800 pips away. So that'd be cool. No, I'm not in Euro pound, Max. It was a suggestion, but this is like the way I would strategically go about it. Pound cat, sure. Bashi, I'm not in trades right now. I'm considering dollar cat as a hedge, for the reasons that I said earlier. So I marked this up pound CAD. I wonder why I did that. This could be, I don't know, on a technical basis. Let me see what the EdgeFinder does, because I'm not really familiar with, or I don't really actively trade these minor pairs. I usually exclude the minors here. Pound CAD. Pound CAD, where you at? I know EuroCAD's neutral. Oh, Pound CAD +1 reading on the eco. I don't know. I mean, if it's a neutral reading, we could stay in a range, but it's not one of those A+ setups in my opinion. Euro pound was actually one I was going to look at. I never went into it, and I'm glad I didn't, because it continued to skyrocket if I remember correctly. Oh snap! Never mind, I'm wrong. Look at that. I had a zone here that I was interested in taking, but we like really flushed beyond that, and so I was kind of skeptical. But look at that, guys. Missed opportunity there. It happens. Hypothetically, would have been 94 in the money. If we were kind of going for a mean reversion, we could be at the 50% level of this range. Yeah, right at it, 50%. Swiss yen. Yeah, I'll go over Swiss yen. Swiss yen broke my heart, guys. I'll be honest. I was up 300 pips, and I was holding on to it, and then it hit my stop loss. But Swiss yen, let's see where it seems like we're at this range again. This could be one of those things where you could range trade, especially because they're both technically safe haven currencies. Then yeah, this could be a good range trade. I know on the EdgeFinder, I don't know if it has a score for it. Swiss yen, actually bearish signal on the Swiss yen. Gerald, you could be onto something here. Swiss yen has a bearish reading. Technically speaking, we just bounce off of this range. Risk reward wise, I mean, we might be a little bit late to the party, but if you do a market order, a good stop loss will be 320 pips. However, your take profit could be 800 pips. Now things could change, right? During this move, if something happens at this level, you got to be mindful of what if this level gets bought into and it kind of continues upwards, then just manage risk appropriately. You see a weaker euro versus pound. I mean, we're seeing that on the euro pound price action. It really reacted to that level, and we're pretty much at the mean now of the range. We're at the 50% level. But yeah, market could just be waiting for that speech to come out. Any other requests, guys? I'm pretty flat. Actually, I don't have positions. I'm just being mindful, just because I was pretty active 2 weeks ago, and I was just managing trades, and I have stuff going on in life, so I'm kind of just being a little bit relaxed when it comes to trading. But those are my opportunities that I'm looking for this week. But I do foresee tariff uncertainties kind of coming back down. We see some exemptions being made in the auto industry, and also just the technology when it comes to the Apple and the iPhones. NVIDIA supposedly plans to make a big investment. I believe it was $500 billion to manufacture AI chips here in the US. So I do think we see some optimism kind of just coming back into the world. And like I mentioned earlier, this is one of those things where it just takes couple pieces of good news catalysts to kind of just bring optimism back and bring those inflows back. It's not like COVID where the world shut down and it's going to take, like, logistically, it's going to take months to years to kind of recover from it. This is one of those things where, real quickly, you can go ahead and just get optimism reloaded back into the market. At least that's my opinion. But Chandler, correct me if I'm wrong. I believe Chris Pulver is in the backstage, right? 9:15. I want to be mindful of. Oh, not yet. Okay. But yeah, guys, what do you guys think? Do you think that the euro is going to fake out? Do you think it's going to go past the 112 level? And what do you think about tariffs? Do you think deals are going to be made, or do you think this is still something we should be mindful of? Bashing and Lee, what are you guys' thoughts? Let me get the dollar CAD here. USDs are, dude, I don't even want to look at that, man. I'm sure that price action on USDs are is crazy. Bashy, I asked, what do you guys think about tariffs? Do you think it'll kind of come down and chill out, or do you think that there's going to be another wave of uncertainty? So dollar CAD on a short-term basis, I guess I'd see if we get some nice momentum, new highs, like we made a new high right here, new low. If I see like another set or two of higher highs and higher lows, I'll potentially be on the right side of the V, and then I'll probably target something like this, then something like this, and it'll be a good hedge in my opinion. Sometimes I like to look at the Ichimoku cloud for momentum. See this lines flipping, turning green, but on the 1 hour, it's really not that accurate. Take that with a grain of salt. Also the moving averages as well. But this could be a good trade, in my opinion. It'll be uncertainty for a while. It's a game that Trump enjoys playing. Yeah, I think the only thing, right? I think most of the world is trying to make deals and make peace. I think it's just the relationship with China that makes it a little bit difficult to do that. President Xi is playing hardball, and it's clear he wants zero tariffs. So if Trump doesn't play ball, I expect more escalation. Yeah, those two are not compatible. I'll say that. GJ, pound yen, sure. I don't trade pound yen actively, Obby. I'll just go ahead and glance at the EdgeFinder reading real quick just to give me a bias as to how I would proceed with pound yen. And then I believe Chris Power is going to be coming on soon, so I want to be respectful of his schedule. Pound yen, we're getting a -2 reading here on the bear side. So not the strongest reading. Technically speaking, though, we have this right here. On the upside. Oh, cool. On the upside, we have potentially something like this. And downside right here. So that's what I'll go ahead and look for, pound yen wise. Similar to, I guess, the US dollar, right? If we expect the US dollar, the dollar yen to get to the 145 level and short off of that level, this could be a similar setup. So we'll keep this in mind. And I'm going to flip to the dollar yen here. We see that on dollar yen. Oh, Chris is here now. Guys, thank you guys for watching or sticking around and for the questions, for the good company. Chris Pulver's here. You guys are in good hands. You guys have a blessed one, and thank you for watching. Bye-bye.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? We are just doing our thing here, watching some SPX. I'm going to try to get out of this trade. Price being a little wild and crazy. See if things settle down here in just a second. I'm trying to get out of this trade for about $1.15 55, which should be about a 20% take profit. So 40 out of 195. Yeah, about a 20.5%. I think if I take the 165, try to get 160 here, just be safe, take the profit and move on. 160 is right there. Just let this marinate for a couple of minutes. 158, 168, 173. Just watching some price action. So what's 30 cents out of this? I think this is still a 15%er. 30 out of 195, still a 15.3. All right, I'll make the adjustment. 165, take the winner, hopefully. Come on. We're getting a pretty decent turn. 54.50 is now down about 50 points in the last 5 minutes, 5 to 10 minutes. See if we stabilize here at the opening levels. We just took out the opening low. I'll see what real-time levels are doing, but a little bit of a fight back here. All right, so I should be able to get this $1.95 closing out for profit, hopefully in a couple of minutes. But bid ask is a little bit wider, so I'll keep that one running. Yeah, this hopefully will settle back in just a few minutes. All right, so I'll come back to that. We're right back in the center. This is the trade that I took this morning. So open, looking at some premium above and below, and we went up, we came down, we're recentered, and looking to see if it just kind of stays there and hangs out there for the morning. That should be enough to hopefully give me some profit. I just typed all this stuff in. Why did not? Hang on a second. Let me get this pushed out. Live market, S&P, NASDAQ, gold, Bitcoin, FX. There we go. All right, see if this will push. Come on, crazy prices. Give me my take profit already. All right, let's get some live chats here. So waiting on a little close for SPX. Should be hitting here in a few minutes. Let's see what we have. So we are looking at a high around 54.81 from Wednesday last week. We pulled back on Thursday, fought our way back on Friday. This is going to be an interesting week with Thursdays being the last trading day of the week with Good Friday. So markets are closed on Friday. We do have some earnings that are starting to get sprinkled in. Bank of America had solid earnings this morning. It's up a little bit. Gap wise, let's go a slightly bigger time frame. You can see some of these pretty large gaps. So I think right now there's a decent amount of resistance. Decent amount of resistance right around these lows. So this 5,500 low, this 5,500 low. Be mindful of this support becoming resistance. The markets could literally dance around between, this crazy low here. This is a strong level of support that could offer up some near-term resistance. I think on a positive note, if anyone is looking for a relief rally, we still have our all-time highs. We now have that 20+% correction. And I don't think it surprised me at all to have the market just be kind of shocked with how sharp and how quickly it got there. I think that was like I want to say like top 5 fastest declines in the market ever, which is, again, like this is what happens when as the markets evolve. It's like things just move faster and wilder and crazier. But with how quickly we got there, if the market's going to find equilibrium, we might have some sideways chop in this equilibrium zone, right? Markets, kind of unable to make highs, unable to make lows, and we just deal with a bunch of indecision, similar to what we had here in early parts of the year before it started to roll over late February. All right. So keep an eye on this. But the nice thing is on a relief rally, if we get above this floor, if we get above this floor, there's not much stopping this. If we're greater than 5,500, there's not much stopping this until 57 to 5,800. So there could be some room for the bulls to still travel up. And there's a nice gap that you can see from this close to this close, or this open rather, that pushes prices. If we get into there, we're probably coming in to fill that gap. So that's if. Otherwise, this is lots of support that could still offer some near-term resistance, and we just chop around. Make sense? Okay. So index-wise, I'm prepared for some more indecision. I'm using this opportunity to de-risk, de-leverage. I've taken profits already this week. Microsoft had 3 winners. XSP, I'm still watching. Coinbase, I took 4 winners. IBIT, I took a winner. Apple, I took a winner. Netflix, I took a winner. Palantir is looking to expire for full profit this week. I took a winner on a cash secured put on the SPY when volatility was really high. I sold like a 425 and 430 put. Took some profits there. I did a 111 trade for 301 credit. Got out of that for 25 cents debit. So pulled in about 90% of that profit. I'm watching the SPY this week to see if it stays above 540 for another winner. We're trading right now at 543, or no, 540, I guess. XSP is 543. And I need to do some rolls. So I'm going to roll some Altria, so MO. I'm going to roll some Coca-Cola. Gold is still hanging in there just fine. We got some earnings I want to price in this week. Earnings would include United Airlines, Interactive Brokers, JB Hunt Transportation, ASML, USB, a lot of banks this week in financials. Abbott Labs, Progressive, Travelers Insurance, Alcoa, Kinder Morgan, United Healthcare, Bank, Huntington Bank, Amex, American Express, AXP, DR Horton, DHI, and Netflix has earnings on Thursday's close, which is going to be difficult to trade considering the markets are closed on Friday. To my knowledge, markets are closed on Friday, or there is a limited trading window. Good Friday stock market hours. So is it closed on Friday? Is it officially closed? So trading days, holidays. So it looks like we are officially closed. Curious if there's anything in futures. Forex will still be open. It'll just be really light volume. Not something you want to fight. Why the heck can I not close out of this stupid trade here? 195, 165. Come on, dude. I'm not even going after a big take profit. This thing is dancing around all over the mid price between $1.55 and $1.75. Just trying to get filled for 15%. UK markets closed Friday, bank holiday Monday. Friday's bank holiday. Yeah, they should be closed. All right. So anyway, I'm just going to hang out on that $1.65 debit. Hopefully that fills here momentarily for a 15% winner. Just need a little bit more time. Was there any news? I didn't see any news today. I think Powell's on the schedule. Is it today or is it tomorrow? Powell's on the schedule for tomorrow afternoon at 1:30. BOC looking to pause rates. We had CPI out of Canada this morning, came in slightly lower than expected. Everything else is low impact on the calendar. I don't see anything major. Price action's a little bit choppier. Just expect some intraday volatility to continue to kind of dominate these markets. Volatility is going down a little bit. We can look and see if there's any real-time news. Watch tool, I took a look at this morning. Fed's high probability of pausing, likely to cut rates in June, July, October, and then the first part of 2026. So we have 3 cuts, another 100 basis points from June to January. And my biggest question with the Fed cutting rates this year is, what does the 10-year yield show us? Because last year when the Fed started to cut rates, the 10-year yield did this. Fed cut rates, and the 10-year yield did the opposite. Okay, we've had a huge, nasty, volatile spike on the 10-year yield, which is no better off than where we started. And I marked this yesterday on my chart. This candle low right there on April 2nd's close, that was the Liberation Day announcement after the market on April 2nd. And the market crashed again, right? We dropped down those 2-3 extra days. So we had the second announcement. So it was the third and fourth trading day, 3rd, 4th, and 7th of April before we marked the low. And all right, just got hit for profit. Okay, very good. So that can be done. Updates. Trade 1, entry $1.95, closed 165. Trade 2, 2.25. Closed 1.85 debit. There we go. All right, closing out for profit on SPX. So my point is on the Fed. When the Fed starts to cut, I really want to be watching how this 10-year yield behaves. If the administration is going to be celebrating that, oh, we've gotten the 10-year down, well, they better say that it's lower than Liberation Day, because if they're celebrating that the 10-year is lower, it's like, is it? Because if it's up here, it's certainly not lower. If it's at fresh lows, does that happen with the market actually dumping again? Do we have more trouble ahead for the stock market, or is it just trouble and volatility ahead for the bond market? I don't know. That's the hard thing to determine right now, because this is where I think the market kind of broke last week, and now we're spending the rest of the time trying to figure it out. So there could be some, QE at the ready. It's not officially happening yet, but Fed, I'm sure, is watching very closely. Cutting rates, watching the yields will be a really important correlation for this next like 90 days, or even out to like August, September. I've got some notes to share from yesterday. Did a live session, which I usually do around 3 p.m. Eastern time. Hopefully you can see this okay, but I'll just read this off. So any positive news offering resolution on tariffs or agreements on tariffs could result in more positive flows. Basically this: if US and China can figure something out, okay? If US and China can figure something out, come to some type of agreement, come to some type of term, stop retaliating with 145% tariffs, and then, just tit for tat, figure out something. The whole global economy can benefit from it. The whole world can stay rotating, and that we can remove some of the uncertainty and some of the friction we've created the last few weeks. But that's really it. It's like, don't mess things up. Like, stop sticking spokes in the wheel as things are turning, and you won't trip up the market. So if we see some resolution, and it may not be immediate, but if this is going to happen in the next few weeks, it would be encouraging to see that markets can drift a little bit higher. And we've had kind of the nasty, uncertain, priced in, flushed out correction. And then the market spends its time doing what it does hopefully best, which is just trying to grind higher. For the market to behave bearish, I've got a lot of lists here, but let's go through them. Earnings compression. Okay. Banks are releasing earnings this week. We got a couple of the companies sprinkled in. Albertsons, I think, for groceries, JB Hunt for transportation. It's not really about the earnings per share and the revenue as much as that's important fundamentally. It is more about getting some type of summary on the sentiment. What's forward guidance? What's the outlook? What's pessimistic versus optimistic? And I think since the market did put in a bit of a bottom, there could be some uncertainty, but there could be some guidance where it's like, well, based on what we're doing, we're trying to position ourselves to, battle these tariff situations to the best of our ability, blah, blah, blah. And just not throw it out there like, we don't know what's going to happen. We're super negative. I don't think anybody's going to say that. I mean, obviously, a publicly traded stock is kind of designed to figure out a way to go higher. And whether it's true fundamentals or manipulation, we'll see. But bottom line is, if the S&P multiples are trading around 20 to 21 price to earnings, I think that earnings compression is a very real thing. We probably need to start trading back down to 18, 17, 16, 15 price to earnings, and that will come at lower prices. Now, we could survive this quarter and we could still kind of remain resilient, but maybe the earnings compression comes later in the year. Price action, we just have to watch price action. If price action continues to, quickly claw lower, watch it. But right now, with this holiday week, I think we're in a pretty bullish window between April, May, June, July. Historically, the market is pretty bullish. And I'm not saying we're going back to all-time highs in this 3 or 4 month window, but I wouldn't be terribly surprised to see that we, respect the low. Everything is kind of safe below that low. And we'll see if the market's just going to chop around between 5,400 and 5,700 and figure out who's ultimately going to win. Do the bulls get the upper hand to get it above 57, 5,800? Do we retake 6,000 ever? Or is it just an absolute chop fest here for the next couple of months? Right. Fed is likely to stay silent. This is another reason, like, if the Fed's not stepping in and the Fed is not doing anything that would kind of assure the market that they're right there, like ready to catch a falling market. I don't think the Fed put is 21% lower, right? I don't think the Fed put is from the all-time highs at 21%, like we saw the bottom at around 48.20 on the S&P. I think the Fed put is a straight up catastrophe at 40 to 50% off the all-time highs. That to me is where the Fed put is. I think if they're going to start dumping what's probably going to be trillions of dollars into this market and just flood the market with liquidity, we're going to have to see a lot more pain in the equities market for that to happen. So I don't think the Fed is coming to the rescue. I think that the government is trying to currently change the narrative to eliminate a lot of the uncertainty and obviously see volatility go a little bit lower. But we're probably going to have an elevated VIX in 2025. Bond yields going higher. Okay. Bond yields going higher. Does that mean that we're going with a higher stock market? This is what I'm saying. Like the bond market is really volatile. And what we've seen is for the bond yields, like the US 10-year, US 20-year to go lower, it came with lower prices in the stock market. That makes sense? That's not a good thing. So basically, if you want the stock market to go higher, does it come with also the bond yields going higher and then therefore pushing bond prices lower? So the safe haven of TLT and even SHY and IEF, the safe haven of that is not looking to go the right way, because right now we have yields that are sticky or yields potentially going higher as the markets are going higher. So that is not a good correlation to have. And this is why I'm wondering, like, how the Fed, when they start cutting rates in June, if and when. I'm assuming that based on the CME Watch tool, the Fed is pretty transparent. I'm pretty sure there's going to be at least a couple of cuts this year. Especially if inflation data is continuing to cooperate, then I'm sure the Fed is going to continue to cut. But the big reaction is over 40 plus years of monetary policy, when the Fed has started a cut cycle, the yields have gone lower. But September of last year was the first time in the Fed cut cycle that it didn't work that way. The Fed cut, bond yields went higher. Okay. So it would be nice to see that if the Fed is going to start cutting, the market can, again, be forward thinking, maybe price this stuff in, and hopefully markets pricing in Fed's cutting rates and yields can hopefully go a little bit lower. All right. Tariff talks get worse and more uncertain. That's a big question mark. What happens there? Mostly just banter back and forth between U.S. and China. Doesn't have any type of resolution. The markets aren't going to like that. U.S. and China continues to escalate. Same type of thing. The tariff talks. I mean, we essentially tariff the entire world 10%. And now we're looking to say, okay, no, it's just negotiation. Come work with us. Come negotiate with us. Let's find a compromise. We're also changing the categories of tariffs. I mean, basically it was announced this weekend. We're looking into essential industries or things for national security purposes, like semiconductors and computer chips, cell phones, tech builds, giving companies like NVIDIA, like Apple that have exposure into China, hoping them an opportunity to either onshore or switch around some of their processes so it doesn't really affect them as much as it would if it was just a blanket tariff into any business with China. And this 90-day window takes us to July 4th or July 9th. Is kind of in that window. But if countries don't come negotiate with the U.S., okay, then there's more uncertainty. If U.S. and China continues to escalate, there's more uncertainty. We know where the low is. The question is does the low hold, right? And then last thing here, it's like similar to the tariff talk, is if we're starting to lose alliances like Canada, Mexico, Europe, Japan even, and being more vocal on modifying trade, maybe reducing trade with the U.S., or maybe putting in their own barriers where they want to limit some of the exposure with the U.S. If they're seeking trade relationships elsewhere, if they're seeking alliances elsewhere, looking at doing alliances without involving the U.S. And again, this is all up in the, but this is what the market is trying to navigate. So this is what makes 2025 a giant question mark. I think 2025 is going to be a trader's year. And it's that. Like, I'm not saying it's simple, but I'm saying it's going to be a trader's year. So the best way to know how to survive this is define risk, take good quality, high probability trades, and try to win as many trades as I can. And that's it. And where the dust settles and all the trades, if I take 5,000 trades this year and I win 80 to 90% of them, I'm probably going to be just fine. I'll have some runners eventually if I get a little bit more sense of direction, if I get some confidence in some of the positions that I'm in, then I'll ride them out. But everyone is probably loving the fact that gold's cooperating, and let's see if the yields can go lower. I want to put a chart alarm here back to Liberation Day lows. Let's go into P really quickly. Again, you're just watching price kind of hang out here. I'd love to see just a little bit more of a drift up into this 5,500 zone, maybe getting above 5,500 this level through this week's expiration and going into next week. XSP watching closely. SPY, I'd like to get it above 5. I'm going to see if we get above the highs here. So what's interesting is the SPX is very close to the previous highs at 54.82. The SPY, the Wednesday high, was around 548. I'm going to set a chart alarm at 548 and see this is back to, I'll call this Wild Wednesday highs. So put it right there at the highs. That exact candle high was 548.62. So 548, I'll go 548.50. See if we can get right back to that high. Okay, equal weight hanging in there. Futures market actually pretty quiet today on futures. A little bit up, a little bit down. Sideways since really the close yesterday. So pretty choppy overall. NASDAQ, similar look on NDX. A lot of resistance here if you go to the 200 moving average. So a lot of resistance here. This is a floor that if price can get above it, there's some open space to continue to recover. I'd say on NDX, if we get between 19.2 and 20,100. So about 19,200 to around 20,100 is a, kind of a big question mark zone. Now, what could this ultimately be? Well, we could get a price pattern here. Could this market go all the way back up to this high, chop around here, and then the next big leg for the bulls would be above it, right? If we clear this high, are we able to see all-time highs again? This could, in fact, even though I thought, man, there's no way this market's going to be a V bottom, it might end up giving us a V bottom, because if we have this aggressive swing to the upside and we have a little bit of a consolidation level, well, there's your V bottom, there's your bullish pattern, and we break above the neckline, and then off you go. And we do hit all-time highs. I'm pretty skeptical at all-time highs, though. I think this could look very similar to 2008 when the market did have a sharp correction and then spent, a couple months working its way back to all-time highs, and then we end up going back down again to the lows. But the problem with that one is that was the dead cat bounce that went lower and lower and lower until we hit a 56% correction. That's my concern rolling off into 2026, is that this market can't hang on to these valuations at these all-time highs and things look a little bit worse. Okay, all right, let's continue to go top down. Qs watching. You can see here 200 moving average is a little bit higher. Floor is around 466 or so. We have a little bit higher to go. The Wednesday high is around 466, almost 467. So we could be surviving in there. I'm going to set a chart alarm. We've got a credit spread at 490 that I'm watching pretty closely out to May. See if we can get there. Is that it? By the way, QQQ, is that a freaking hedge, or am I stupid enough to take a 660 wide credit spread? Let's find out. Yep, I guess I'm stupid enough to take a credit spread. Okay, that's out to May. I must have taken that trade a while back before all this nonsense happened. That trade's been open for 54 days, so that's well before all this drama. All right, so that's my bad. But if we get back to 480, 490, I might just take that one for a small loss. Dow is fighting the good fight, right up back to the floor from the March 13th low, possibly coming back into the 200 moving average. We'll keep an eye on this one. I added some trades here on the DIA. I think I have some puts on the Dow. Let me double check this. I know I have some naked puts on the Dow. I put this in Pulver Alerts. Let's go DIA right there. So let me organize this. So DIA, this is a $111 for $5.50. It's still showing a little bit of loss right now. This one's out to June. If the Dow stays above 365, this is a pretty good profit. Okay, that one is just a cash secured put. Still showing some risk. I'll label this one as well. So this is a naked put. These are on my margin accounts. This one is, hang on a second. I think, so these are all the same expirations. So this is a 1-1. Okay, never mind. This is not. So this is a 1-1-1. This is a 1-1-1 trade. And this is a naked put. There you go. So that trade for $2, this trade for $3.45, and there's still some time left in the trade. We are about 40 points above the 111, and we are 46 points above the naked put. So a little bit more time. I want to see more of that volatility crush. That one looks okay. This one's just a naked put. This one's similar. This is a 111. And then I've got a naked put here. Oops. There we go. This one is a credit spread. So bull put there. I did this on most of my accounts. Wide bull put on the IRA accounts. Okay, that's a wide credit spread. Same thing here. So let me organize this a little bit. This account's going to have the 111 in naked put. 111. That one is just opening some shares. This one, no exposure. That's an IRA. This one, wide credit spread. There we go. All right. So I had some trades there on the Dow. They are well below the lows. This low is around 366. So I'm looking at the 365 and the 360 levels for profit. Okay. You're watching intraday price still be very messy. Here's a 5-minute chart. Intraday price is quite indecisive. So a lot of chop today, which is totally fine. But hopefully it doesn't get surprising one way or the other directionally. Market can still drift higher. You know, earnings this week is a little bit on the light side. Here's what earnings look like. So we had before the market, we had Bank of America, Citigroup, Johnson & Johnson, Albertsons, PNC. Afterwards today, we have United Airlines, Interactive Brokers coming after close today, JB Hunt for transportation, more financials, financials and insurance tomorrow, and Alcoa is aluminum on Wednesday. Thursday after close is Netflix. I'm looking at a trade on, a handful of these. I'll see how they price out. Netflix, I'm probably gonna have to take out to next Friday, which would be the 18th, 25th expiration. I want to take a trade on Netflix, see if there's enough volatility there. All right, let's keep going. Volatility index. Nice retreat on the volatility index. Hopefully there is more to go. I'm pretty sure term structure is still in backwardation, but let's go term structure. And this is still showing backwardation. There's another, this one here for VIX Central. So near-term volatility is still way more uncertainty than later. So this has to flip, and we want to see this one starting to slope upwards if we're going to see that near-term volatility is under control, and then you take on more risk as you go further out in time. That is contango. Currently, we're in backwardation. That's never a good thing. That's when there's a lot more uncertainty in this market, tends to break a little bit. Volatility, the move index. This would be good. This is bond volatility. So if you see the move index going lower, that's a good sign to see the yields going lower. SPXY, I did take some shares this week, and I'm up around $1.30 right now. So I bought around 35.60, and we were up. Here's a low at 35.15. I bought around 35.60 yesterday, so I'm up around $1.30. I'm just looking for the VIX to go lower, just take a little profit here on SPXY. Dollar index. Dollar index is oversold. Just be careful if you are still selling dollar. Be careful, right? We have come back to clean up some of these previous lows. this could be a bear trap in the making. So just be mindful that like this dollar index going lower, lower, lower. I don't see this trend really going that much lower, especially when we're oversold. We're in one of the most liquid instruments, which is dollar for Forex trading. Technically speaking, this usually has some strong technical obedience, and so having this low, I could see price maybe chopping around here a little bit more. But if you start to get another print of divergence, similar to what we did here, which is a squeeze, and then the market squeezes back up. Now, I don't know if the dollar is going to be this big, ridiculous break to the upside. I doubt it. But like I've kept this analysis pretty clean. If we are using this resistance level and this resistance level, I thought we'd have another test of the trend line, which we didn't. But if we have a move back up into this level, the bears would be waiting here to see if that's an opportunity to then look to resume a short trade. The dollar can go lower, but this is potentially wide open space on the dollar. If we go lower, we're breaking these multi-year lows. This dollar would be potentially swinging down into, if I go high, low, lower, high, lower, low. Let me drag a symmetry spot here. So if we go from high to low on the dollar and we swing this from symmetry, okay, you're talking about a move maybe down towards about 96. Okay, could it go lower than that? Well, that'd be wave 3. So if we go wave 1, all this was a nasty wave 2. Wave 3 would be this push. Wave 4 would be a pause, which use this past support become resistance. And then wave 5 will finish the move. We could get the dollar back down to 91 or down to 90. So yeah, I think there's good opportunities ahead on the dollar. I just don't want to short the lows. I'd rather see a pullback first and then plot this to symmetry, which is around 97. Okay, that symmetry is around 97. So if we pull back to 100 or 101 or even 102, there should be a good opportunity to maybe resume dollar selling. So if I'm looking at the dollar index to head a little bit higher, that means that I'd be looking for a pullback on euro dollar, right? Euro dollar screamed up here towards this 1450 handle, 1460 handle. I would be, look, if you're long euro dollar, this is not a bad spot to grab some profit. You had an opportunity here from 106 to 114. That's an 800 pip move on a currency pair that rarely gives you fast direction like that. This has happened within the last couple of months. So euro dollar taking profit would be pretty good. If I'm looking to reposition on dollar, look, take this low, take this high, look at some fib levels, and look at a swing opportunity to see if you can catch a swing, stop loss below, take your defined risk trade, and then plot your move to these highs. There's good asymmetry here as far as reward to risk. So if you trade this area small, max risk, below this level, let's say that's 1% or less, and then a swing that hopefully dollar cost averages in, let's say the break even point, if you dollar cost average in a couple of these fibs, let's say the break even's right here. Well, that's my risk and this is my reward. That's a 2-to-1 swing. So if you're willing to, risk half of 1% or risk 1%, and then you double that. And on the plus side is if you add some buy stop levels and this goes your way, you can turn a, smaller risk into a reward that maybe ends up giving you, 4%. So you can really step on the gas with some asymmetry if you get price to continue to cooperate with you. Okay. Weekly chart on what? Euro dollarly. I mean, it doesn't have to stop there. I mean, we could go all the way back to 138, but that would be, I don't know. I don't know if that's the case or not. I'd say we get up, if we're going to swing higher, we can go to 122 to 125. This also could be just a big, big, big nasty chop zone. Dollar here, not the lows, not the highs, just more indecision. I don't know. The dollar index could also pull back and have some indecision. So if I find a good setup on the dollar, technically I'm going to take it. Right now it's just been a little nuts. Okay. All right. Let's go gold. Let me just keep going top down here. I'm going to go oil, gold, silver. We'll get into currencies. So let's go. That was DXY. Go back to the daily time frame. Oil. Oil, I'm wondering if I put in it's probably not going to be the greatest trade as far as like reward to risk, but if I put in I almost wonder what this would look like if I put in, I tried to price this out yesterday. I couldn't get a fill on CL. Let me see here. So if I go CL, try to position for some income. I don't want to take a ton of risk on this trade, but I'm curious how this one plays out. So if I go CL, how far out would I go? Maybe this 31-day. That's not that far, but let's see what I can get. If I go 31 to 62 days, this might be more profitable. Okay, how much lower on CL? So low's around 55. Let me see if I can put in a profit trap there. So if I buy the 55, sell the 54, and let's put in like a 50 here. So that gives me 600 bucks. I'm going to define this risk though. I mean, that's way too much heat and that's a lot of buying power. So if I go one wide on a trap, and maybe I go two wide, three wide. Yuck. Maybe 51. So make about 190 bucks. Max loss at 2,800. I don't love that trade. That's a bigger loss than I want to take. If I can tighten this up, this might help. Now I get about $300, $260, $200, $180. This isn't a bad trade. So if I'm risking 1,800 bucks, there's about an 85% chance of profit on the trade. Mechanically, that's okay. You know, do we break $51? 51 would be, you know, way down here. This is only out. It's out 62 days. Okay. So, I don't know. It's not a great reward to risk. I mean, I'm risking $1,800 to make 680. That 680 would be if prices below 54.50. That's my profit trap. If I want to make this a little bit better income, I could do it that way. Pull in about $210. So that, I mean, that's a decent income trade for 60 days. Max risk about 1,780. Buying power is not too bad, about $1,300 in buying power. Probability profit here is about 85%. If I shift these down slightly, I make 170 bucks here. Risk less. Buying power is way reduced. This isn't too bad. Let me see what this one offers up. About $100. Okay, so if I go 50 cents more, this one's not bad for 15 to 16 cents credit. Let's see. Max risk is only 1,300 bucks. That's less than 1% for most of these accounts. Not a bad income trade. All we have to do is stay above $50.50. So we'd have to drop, oil would have to drop another 17.5%. Now it's certainly capable of that. It truly is. But probability of that dropping, I think, is low enough. I'd like this to be a higher probability profit, but I think it's because we have higher volatility. That's why it's showing a lower pop. Let me see if I can get filled at maybe a 170 here. Let me see if I can get up to 170 for this trade. So it only needs about $976 of buying power. See if I can get filled at 17 cents. 17 credit not filling, 16 credit. It's trading at the mid price right now. 150. Not filling. Come on, you turd. I mean, delta-wise, we're down to a 14 delta. I mean, the probability of the trade's reasonable, but I don't want to go lower. All right. I'm going to cancel that for now. I'm going to revisit that trade. Let's keep going through analysis. Natural gas, UNG is down, XNG is up, still hanging on to that diagonal spread. This one I'm going to get rid of. That covered call should be something I can get rid of. So I'm going to UNG roll this call out. Gold, 32.23, just chilling at these highs. I still think there is a technical reason for gold to find this 144 200 moving average this year. I don't know what it is. I say that like full transparency. I don't know what this would be to cause gold to drop like this. But we either have something dramatically shift the value of gold, or we see gold get like exponentially higher and it breaks and then it comes crashing back down. So either this, goes sideways and rolls over, or we see this thing just being like the greatest asset in 2025 that's going to crash. I don't know. But this level will get hit. And I'm pretty confident that we're going to get hit by the end of the year. Because if we go all the way out, to, what can make gold less attractive is getting some type of trade terms that are, happy terms for everybody. Win-win for the world would be probably a bit of a decline in gold, but gold's still a good asset to be holding. So anyway, we're at around 386 bars right now. If we go out to December by the end of the year, that'd be 571 bars. That's a monster bar count. Okay. I don't think it's going to go that long without hitting the 200 moving average. So either we are in for like a quick correction or a exponential move higher and then a crash. I don't know yet, but I will still enjoy the ride higher. If we pull back, I will enjoy buying some dips. Until then, I just stay the course and hang on to my profits, which don't look terrible. So profit-wise on gold, some of the exposure that I have, CEF is up around $3,700. GLD is up around 20 grand. PHYS is still up around $3,700. And I don't have any futures trades on. So that's it for now. But I'll keep riding them out. Silver snapped back, which is nice. It's still not anywhere near the highs, but hopefully this floor around 28.80 is pretty firm. And we still have some resistance around 34.90 to get back above. Hopefully what was a bit of a crash here is just going to start filling its way back up to 33.50s, maybe back up here into the highs. Maybe we make some fresh highs on silver. Bitcoin hanging in there at 85. Just be mindful of this. Watch this resistance. Watch this support. Even if we break this trend line, it doesn't mean that I'm bullish. I think it's going to be a range trade. So I could see Bitcoin, even if we go on the right-hand side of this trend line, still dancing around this range. But if we accumulate like we did pre-election, this looks good to buy the lows and see if this will then break and go higher. Right? And if I'm wrong, if this is like a surge above, I'd still look for a pullback and then see if you can get a chance to buy the dip and get back to highs. But Bitcoin's going to have to come with some risk on, and I think we're still not there yet. This isn't really a risk on environment. So maybe a sideways range, but looking to scoop up some support levels. And then if you can accumulate at those lows, we come back to highs. That's a good little gain. From 75 to 107, 108, that's a really good looking trade. That is around 47%. Give me a stock in 2025 that looks like we got 47% upside. Not very many, at least in the US. Okay. All right. Bitcoin, MSTR, I'm still looking at this one to hold above 310 to get that called away. That's another potential income trade this year. Coinbase took this one off for profit yesterday. 225 credit, closed it out for a 5-cent debit. Ethereum wouldn't touch this until we're on the right-hand side of the trend line, still waiting. Copper looking good. Should have full profit in the next 9 days for copper. It's about $160, so it should be worth like $2,000 for me. Japan, Japanese yen still climbing. Nikkei responding off the lows, a big range, potentially a big range. This is like a 27% range on Nikkei. FXY, I'm still long shares of this. Brazil, I'm sorry, EWJ, looking better. See if we can get back to these highs again. My break even is around $65. I wouldn't mind if this goes all the way back to these highs. I wouldn't mind just taking the profit. I mean, I put in $3,000. If I've got $3,000 with a break even, let me see what that price would be. So we're looking at, or maybe a 7 to 8% gain. Not the best, but it could be worse considering it, kind of survived a dollar cost average crash of 20%, and I get back and close out for 7 or 8% gain. That's not awful. DAX responding nicely after that little crash through the 200 moving average. I like the DAX better than FTSE, but FTSE is still also responding nicely off of the bottom from April 7th. Argentina, same thing, below the 200, back above it. China responding nicely. Trendline support, maybe a bull flag here. So if we go here, a little bit of sideways price action, maybe a bull flag that starts to get China back up to highs again. Risk on trading could certainly look good for China. Risk on trading could still look good for the German index or the Euro stocks. A break above the 200 moving average, hopefully at one point, looks good for Brazil. Latin America, same thing. Mags, I think there's room for the mags to drift back up into the 200 moving average. There's still another $3 to $4 to get back up there. I think 49 to 50 would be a great recovery on this. Still not done yet, but I did sell some puts when we were down here on mags. I was selling some puts on pretty much every Mag 7 stock. So Apple sold some puts. Apple, I've got a 195 by 190 ratio spread that expires on Thursday. So that looks pretty decent. So Apple here. Let me go to my near-term expiration. So I've got ratio spreads. Where's it at? Oh, I closed. Okay, never mind. I closed it out already. Apple, I pulled in. I think I pulled in like $2 credit, and you can see over here I closed it out for 13 cents, 14 cents, and 17 cents. So rather than waiting all the way to expiration, I just took the profit. I mean, it's fine. I mean, 190 is trading for about a 10 delta. There's a low probability that it would come back to that level. But I didn't want to sit and wait on it through Thursday in case anything silly happened. Just take the profit. That's about 90+% of the profit on Apple. So just going to be capital efficient. That one's done. Amazon. I'd love to see a nice, strong bottoming formation here. I mean, we have a low on April 7th. I sold some puts. I did some ratio spreads. I'm looking for some type of bottoming pattern. This might end up being like a falling wedge. If we go this way, this way, this way, this way, if we look for a trend line break, Amazon, eventually looks good to the upside. Still one of my favorite long-term stocks. Broadcom, I'm staying out of this one for now. Google, I've been dollar cost averaging into it. If Google gets back to all-time highs, this is a pretty nice gain. Chunk of shares, lots of income trades down here. If we make our way higher, this could be a bullish pattern to look for. If we come back up to this level, this could be a nice little bullish pattern on Google, and then we make our way back up. If the market's going to go to all-time highs in 2025, I'm sure Mag 7 can make its way up as well. Meta, I'm still waiting for Meta to fall a little bit deeper if possible. Microsoft looking great. Close out. A lot of these income trades are closed. 229 closed out for 35 cents, pulled in about $1.95. Netflix, I closed out I did a couple trades here. I had a put condor, which is way down below, and I had a butterfly spread up above. So I think I've gotten rid of all my Netflix exposure with profit, but I'm looking at an earnings trade for this week and see if I can take it out a couple weeks. So Netflix, I have zero exposure. Yep, so that's profit. Good. Nvidia back to 111. I have a collar trade from the 100 to 135. I sold a decent amount of puts at this is closed for profit. And I sold a $70 and $75 put for just premium. When IV was really high, I sold a $50 put. I did a ratio spread. I sold $70 and $75 puts. Fundamentally, I think we're sitting around like $100 to $110 fair market value. I'll just hopefully just collect some premium when the IV starts to deteriorate. I'd love to see Tesla making its way up. I did get Tesla called away last week for profit. My break even was like 224. Got it called away at 247. So 224, 247.50. So that was it was just under $7,000 on Tesla last week. I'm doing the same thing again with some income trades. If we get above 255, if Tesla is greater than 255, then I have about another $1,000 of income, and I'll be cheering this on for a Thursday expiration. So hopefully we are drifting higher, stay above 255. If we don't, I'm going to flip it again, just like I did before for a couple weeks. I know we have earnings on Tesla. I'd like to not have to take in shares and take earnings into consideration. But what I can look for is a deep in the money call And if price goes higher, I'm going to sacrifice the upside, but I can at least look to make maybe a quick $500 to $1,000 even through earnings and still get the stock called away. So as long as I can collect enough extrinsic value on my covered call, then I can lower my cost basis, way down here and hopefully withstand any type of dip to the downside in case earnings are a disappointment. But preferably we would stay above 255. I don't have the assignment. And even kind of best case scenario is if we're hovering between 255 and 260 this week, I have a potential profit trap. So let me take a look at Tesla, and then we'll start moving into currencies here in just a few minutes. So Tesla is here. I do have some shares of Tesla. Let's talk 111s. So this trade right now, it's only down about $100. But if price is greater than 255 but less than 260, there is potentially a $700 credit or $700 profit there. So I could go after what is about $1,000 to potentially, let's go 700 times 5. So anywhere between $1,000 to $3,500 income on Tesla if we're greater than 255 this week. We'll see. I'm not trying to be greedy. I'm just saying if it's looking good to stay above 255, then I will hopefully see this trade settle out for a nice credit. So I'm going to keep a close eye on that one for the week. Let me set a chart alarm. I'm going to set this at 260 and see if I can just get a little bit more drift to the upside. Berkshire back up to all-time highs. I don't know about, I'd like to almost short this one, but I think that's silly. I don't know if the market's loving this because they're sitting on 20% cash. And Buffett is, arguably one of the best traders ever. So I'm not going to short it, but I wish I would have bought it right at that 200 moving average. That would have been great. So I did ratio spreads down here. Price dropped, and I was selling some puts. I did a 111 trade on this, made some income on Berkshire. I did it on Progressive. I did it on Chubb, which is insurance plays. Bonds, take a quick peek here. TLT. Mainly TLT has stopped the bleeding. It's still a long ways away from that recent high at 95. 10-year yields, which is mainly what I'm focused on. We are retreating a little bit. This is a big level to watch, though. Okay, that closes the Liberation Day announcement. Markets went down, bond market broke. We're going to see what happens. If this is just a big shakeout, down to up, maybe it just settles back in and it's none the wiser. It doesn't really do anything. But for the U.S. government to be celebrating, hey, look what we did. Nothing really matters until we're back below that level. Otherwise, this entire tariff release has been just a bunch of noise and a bunch of nonsense. Because if yields aren't actually going lower, that's not helping anybody. Okay. Just for context, from 2009 to 2011, went 635 bars. Well, that would also be a look into what this market may be pricing in on gold. Right? If gold is going to be seen as this like fantastic safe haven, let's go back to 2008 to 2011. Did it go 600 bars? It sure did. Okay, now I'll give you your 600 bars. Okay, I will give you 600 bars. However, close, 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 close. And right now, gold does not look like that. So we have 1, 2, 3, 4 attempts to try to find some balance in this dynamic support zone, right? This is the last time that we touched here. That's when we finally hit it. And it was a lot of noise at the top. So you're right. It's 600 plus bars. If we go to the end of the year, we're going to be at 570 bars, 570 plus bars. But we also would be looking way different because I'm curious what the stretch way move was. What was our percentage here from this high down to, so we had a move of about 20%. So if gold gets about 20% away, again, I wouldn't like sell the top, but I would just be expecting gold to turn a little bit more bearish. I can take nibbles at it. I can do a bear put spread at the high and see if it crashes, right? If we find that 200 moving average, there's plenty of distance to be right within maybe 30 to 60 days. So, and all it is just a near-term income trade to trade the technical probability. So, look, hypothetically, if we go all the way to the end of the year and gold is still not hit the 200 moving average, it's probably a trade for 2026. So I can start taking some bites, maybe some bear put spreads, probably bear put spreads over bear call spreads. I don't want to be assigned short on anything. But yeah, if we stretch to 17, 18, 19, 20% away, I'm going to get more of a, top called on gold. Okay. But good point. I'm glad you brought that up. So, it's not like 380 bars has to be a topping sign, right? But during this, this is 08 when the market was, in full, calamity. The bottom would have been September 09. So as the markets were dropping hard through 08, I'm curious where this top was. August 2011. Interesting. But what I think also is gold, when we actually stretch that way, you notice how gold didn't become a good trade for a while. Like that run up became probably a 50% pullback, right? I think I have that fib right here. It's got to be close. So yeah, we pulled back to around that 50 to 55% zone. Wow. Yeah. After topping out with a 20+% overextended move and 600 plus bars. So yeah, fast forward to now. I mean, this is what I'm looking at. It's like we haven't really had, other than maybe one decent test. I would say that was our one decent test right there. So since this started, I'll give like sideways was close but still didn't touch. We've had one test, not four, right? But different market. History doesn't repeat, it rhymes. So if this gets more exponential, it's great to be enjoying your run in gold. But what's not great is at some point this probably gets so far stretched away that it's going to be a drop. Okay. So right now I'm going to change this blue line because we are not 20% overextended. But let's have a look. So from current price to now we're about 19. I mean, we are pretty darn close, man. There's 20% right there. So from this candle with this recent high, that's about 20% overextended. So it's got to be like from an extension standpoint, I think it's close. From a bark out standpoint, it has been longer. But I wouldn't be terribly surprised to see this fall. Now, what am I going to do with gold? Nothing. I'm going to hang on to it. I'm just going to stay long. Now, if we go longer, if we go out longer, and this bar count gets to 500 plus, I'm going to start taking some stabs at it. At the very least, I'll be protecting my profit along the way and probably start taking some income trades to the downside. So I firmly believe the technicals will win out. I think we're going to have a reversion at some point, but I'm not here to call the top. So if we go higher, that's a sign of the times. Markets are uncertain. Gold's a great safe haven, and so far still looks pretty darn good. Okay, we did Bitcoin, we did gold. I was leaving off on some of the yields here. 10-year, watching that yield to kind of the Liberation Day candle. So we're not there yet. If this is just a bunch of noise, we'll see how the bond market volatility persists. It's probably going to be high. Mortgages are still in the mid sixes. Futures market. China, let's take a quick peek at China. Alibaba, nasty reset. What a rip, man. Alibaba up 85%, and then Alibaba down 35%. That is a nasty move. JD, I have some options out to May. I'm still looking to get this one called away around $40. KWeb, I'm out of. FXI, I'm out of. Schwab Dividend Shop Growth, Schwab non-US, those are fine. Advanced decline line. I talked about the timing of this market. It happened to work out with one of the biggest up days we've seen ever, which was Wednesday last week. That was when this thing was down to 5, and the NASDAQ was down to 3. And even if you had the courage to buy something, it's a pretty good trade. So, I mean, as far as a timing indicator, this is pretty darn good. Maybe we'll have a chance to do it again this year. Maybe we'll have a chance to, short the market later. But that's all I use it for. If we're coming down to these major lows, I'm looking to buy the market 30, 60, 90 days. That's the window I'm looking for. Once I get paid, I get paid. It's a timing mechanism. NASDAQ, same thing. Nice level off the lows. We were down to sub 4. All right, some more stocks. AXP is at 258. That one's out to May. Earnings this week. We'll see if it's positive. Some other stocks here, some sectors. Let's get currencies, and I'll let you go. Aussie CAD pulling right back to the pocket. That's good. Aussie Swiss responding nicely. I need to start shifting these buy stops lower. So I'll look at doing that today. Aussie Yen, same thing, kind of a flashy crash move. Aussie New Zealand divergence on the daily time frame. I'm still going to hang in a dollar cost average as a range trade. Aussie dollar took the profit on that 60-20 buy, closed it out for 325 pips. CAD Swiss still hanging out the lows. Would love to see this one start to give me a bullish pattern so I can move my buy stops lower. CAD Yen, stay out of that one. Swiss Yen, I would stay out of this one as well. I don't know. I just would. Unless you're looking shorter term and maybe this thing turns. But I don't think you're getting the Japanese yen to act as the better safe haven. I think the Swiss is the better safe haven right now. So if risk appetite happens, it'd be nice to see the Swiss cooperate. I wouldn't be upset if the Swiss intervenes in some way, shape, or form. Last time these big interventions from the Swiss National Bank was 2011 and 2015. Other than that, they've stayed silent, and it's been one of the strongest currency pairs for the last 3-4 years, to the point of historical lows and highs that have never been hit before, which I think is interesting. It's like usually in Forex, there's kind of historical range that these currency pairs can kind of stay in between, and the Swiss continues to push the boundaries. Euro Aussie, we're coming right back down to, there's a lot of volatility, but high, low, high, low. It's enough volatility to make your head spin for the short term. Don't get greedy on this one. If you're looking for a buy opportunity to stay with this, maybe there's a buy opportunity in this window. Confirm it on a smaller time frame. Okay. If this is a flash crash move up and this just continues to settle in, it pulls all the way back into here. Maybe that's a chance to look to get long again. It's price action. Watch your levels. I don't have a good trade on it right now. EuroCAD, maybe a chance to short this one with a defined risk. If we come up to these highs, looking to short this on a smaller time frame, tight risk and reward, that's pretty asymmetric. That's not a bad trade. Confirm it on a smaller time frame. Euro Swiss, we are testing multi-year lows. I want to see if this will start showing some bottom formations. I'll move my buy stops lower. Euro Pound, holy reset. Not a surprise, this one, my robot trades Euro Pound. Doesn't really go very far. This one did move about 300 pips, but it's fading. We'll probably come back to equilibrium. Euro Yen, stay out of it. Euro New Zealand, same as Euro Aussie. Quick, it's just retreating, it's rebalancing. If it is going to be this shift and risk on environment, then maybe this goes all the way back down to the 200 moving average, and then you can build another base, right? Maybe build some more support and then take this thing higher again. Not sure. But if it's high volatility like this, I don't love these currency pairs. Euro dollar, I think we have a pullback coming with overbought conditions, DXY's oversold conditions. Pound Aussie, same thing. Straight up, straight down, be careful. Pound CAD, if you're looking for an opportunity here, if you didn't buy the dip, then maybe there's resistance sitting in this area. Confirm it at the highs, confirm it on a smaller time frame, stop above, and then take it back down, see if it's a range trade. Resistance up here, support down here, see if it responds on a smaller time frame. Pound Swiss looks good. Just be careful on margin. This one's still 2 to 3 times more expensive than others, but likely with these two candles being very inefficient, I think Pound Swiss makes its way back up. So if you want to take a nibble at Pound Swiss, I think it goes up maybe 300 to 400 pips. Not a bad trade, but margin is higher. Pound Yen, I don't know, equal lows, but I don't love the Pound Yen unless you're scalping. Pound New Zealand probably making its way back down to the 200 moving average. Looking to sell any rallies with confirmation on smaller time frames. Pound dollar, getting some love. This trend line support is the real deal. I said if you're buying bull flags or buying bullish confirmation on smaller time frame, look left in the chart to get back to 34. There's a little bit more upside, but you can look at some shorter term confirmations, keep the stop losses out of the way. But you've had 1, 2, 3, 4, 5, 6 days of bullishness. If this runs higher, cool. Move your stop losses and trail your profits. Is it possible this goes all the way back up into the 140s? I don't know, maybe. Or it's just a big range. That's a big high. That's a big low. We can come up here. Maybe this thing tops out. There's just a potential range. Resistance, support. Dollar index is kind of playing the same way. New Zealand CAD. Beautiful move back into the pocket. This is why I leveled into New Zealand CAD. So buying the lows, had pending orders to buy the lows. Right now, this is all starting to show some signs of profit. So get back up here, get back up here. We get to 8,800. I'm taking all profits on my New Zealand CAD. New Zealand Swiss, same thing. Waiting to see if I get a better bull pattern so I can start moving my buy stops lower. But this one's likely going to pull back and find some pockets around 5,000. Hopefully we can clear 5,000. I love a bullish pattern in here. Something like this, pull back, and then a 3 to 5 wave move. Give me some profit on New Zealand Swiss. New Zealand yen, no trade. New Zealand dollar, took the profit on this one. Bought the equal lows around 5,600, took the profit. Dollar CAD, everyone's been asking dollar CAD. Look, I said this yesterday. It's a short-term opportunity. If you're confirming on a smaller time frame, resistance here to become support. That is the near-term trade. That's all I see. So if you're already confirming on a smaller time frame, stop losses below that turn, and hopefully this is going to pull back into maybe 4,000, maybe 4,200. And if you're going up, move a stop loss to break even or better. If it wants to go higher, that's fine. But this could also be a 1, 2, 3, 4, 5, and this comes all the way back into settle in around 34 to 3,200. So I've got to find a really, really clean setup on the dollar CAD. There was a short-term one just off these lows. It's a lot of past resistance. So if you're taking that on the smaller time frames, you probably have some precision to enter. Dollar Swiss, very oversold conditions. A lot of inefficiencies here. So if we get a bottoming pattern, I'm looking to see a 1, 2, 3, 4, 5 wave move, kind of repair this thing back up towards 9,200. That's the plan. Dollar yen, I'm staying out of this one. I think right now it looks like every pullback is being sold, but if you get a pullback, you can look to sell it. Otherwise, if it just goes lower and lower and lower, there's symmetry right here. Don't be surprised if it bounces at symmetry. There's the low. That was a divergent low. There's symmetry. If we hit it, short-term opportunity, look for a bounce. Confirm it on a smaller time frame, tighter risk. Try to go after a 1-to-1 or better. Move your stop losses. Trade the structure. Okay, I'm going to let you go. I got to jump into a meeting here in a couple of minutes and cover a little bit of everything top to bottom. Have a good rest of the day. I'll see you mañana. All right, thanks, everybody. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.